Joining us in studio now, Chris Meyer, the CEO of RMB Morgan Stanley. Of course, Chris coming in at least once a month. Chris, Bafana, you're still flying the national colours. We're all Bagana today, and you have been watching quite a few of these games, haven't you?
I have. I think the dark rings around my eyes probably attest to that.
So you'll be quite relieved when everything is over and you can get some rest again. And just looking at the World Cup, we're entering the final stage now, and it really seems to have gone remarkably smoothly so far.
I think so. Look, I mean, I think the economic effect isn't going to be as good as the feel-good effect. So we've kind of tested the waters with a few of the industries that participate in the World Cup, and it feels like it's quite mixed. I mean, the retailers seem to have had a cracking June, particularly the likes of a Foschini that obviously has the...
Of course, because the weather was so cold a couple of weeks ago, everybody probably had to rush out and buy jerseys and coats.
Exactly, so there's a bit of that going on. That seems to be a positive sign, and I think I saw some results out of Adidas. They had their AGM the other day, and they seem to be revising upwards their estimates of what their apparel sales were for the World Cup. I think on the negative side is the hospitality industry hasn't really had a bonanza. I mean, the gaming industry is up on last year, but certainly not up materially. We know what's happened in the hotel industry. A lot of the rooms got handed back, and they've clawed a little bit of that back in terms of recent demand, but still in the urban areas feels good, but outside of that I think they've been disappointed, the hotel industry. The rental car industry is definitely behind what they thought they might have done. And in fact defleeted up, just ahead of the World Cup. And then I would say corporate South Africa has definitely slowed down. I mean, it doesn't feel like there's that much going on in the sort of manufacturing and corporate South Africa at the moment, given people are watching the TV and going to games. So.
Of course, we had those ISM numbers out yesterday, falling below 50, and in the commentary we had Kagiso Securities saying there was a bit of a World Cup effect in there because people are being a little bit less productive, aren't they?
Yeah, so I think, look, it's not, I think initial estimates were 0.5% of GDP. I'm not sure we'll get quite as high as that, maybe it's a little bit less. It's still positive, and I think what's probably more material is obviously the intangible benefits of having South Africa on TV screens worldwide is something that we hopefully will feel for years to come.
So we're looking at a longer term effect coming from the World Cup. We had President Zuma last week saying that he thought it would probably add about 0.3% to growth. Do you think that's probably...
Has he become an economist now?
Apparently.
Okay. I think he might be spot on.
I think he employs economists.
Yeah.
I mean, we mentioned the ISM data, the PMI data yesterday. We also had ISM numbers out of the US last night. We had PMI out from China. And really, that's just winding up a whole spate of economic news that has disappointed the market, Chris.
Yeah, I'd feel. Look, I mean, we've got a few economists on the road at the moment doing some marketing, and the most common question now is there a double dip? And I think the problem with the stock market is because the market got quite expensive based on an anticipation of a very strong rebound in earnings. As soon as there's any risk that earnings recovery might be a little bit more muted because the economic recovery is a bit more muted, the markets will sell off, and I think that's exactly what's happening right now.
Of course, we had some numbers out from RMB yesterday, just showing year-to-date what the market has been doing. The quarter for equities was pretty bad. Second quarter down 8%, year-to-date down 4%, but over 12 months still up 18%, so not looking too bad over a longer period.
Yeah, look, I think that the challenge now is the second quarter. What it's done is it's taken the confidence out of what I would call the marginal buyer of the stock market. So hedge funds, for example, would be down typically in the second quarter now. And that just means that they are struggling now to produce positive returns for the year internationally. And when that happens, you're unlikely to find the hedge fund industry, which is about half of the volume of markets globally, really put a lot of risk on the table until they can see better clarity around where the economic conditions are going to hit in the second half. Because we now enter into the Northern Hemisphere summer, many of them aren't there. I think we're going to have another tough couple of months until probably the end of the third quarter, when hopefully what we'll see is some signs of at least the base expectations for where the economy will perform in the second half of this year and into next year have been reset at a level which the market now feels comfortable with.
Of course, we are coming up for US earnings season again. Do you think that might give some comfort to the market, particularly if companies are getting back on their feet and are starting to hire people again?
Yeah, I wouldn't use that as a proxy. I think, unfortunately, what we've had is a pretty good first quarter, and I think the second quarter is going to be a little bit weaker, particularly by those companies that tend to report early. like the investment banks. I don't think it's been a very good quarter at all for the investment banks. And if they're a bellwether example of where the sort of short-term economic activity is, or capital markets activity is like, I think we're going to be in for a pretty disappointing quarter.
A couple of shares you wanted to chat about today is recent stock coverage by RMB Morgan Stanley. You have Aspen and Harmony. Perhaps starting with Aspen, you have a buy on Aspen. Now, this is a share that did pretty well during the whole recession because, of course, it is a defensive stock. Do you think there's still upside to the share? It's trading around 75 Rand?
Yeah, I think, well, look, as a group, we just generally find it a little bit easier to analyze companies that have organic growth at the moment rather than cyclical growth based on some kind of economic recovery. So we'd be investing in shares like Aspen where you do have good organic growth, and they've got a few levers they can pull in Latin America, potentially Australian acquisition, some interesting businesses with GlaxoSmithKline now through Europe. So it's not cheap, but I think this is the kind of market where you should pay up for defensive growth, and this is definitely a company that has defensive growth.
Tell us about Harmony Gold. That's trading around 80 Rand.
Yeah, no, Harmony is a little bit, I think that's a slightly more controversial call. It's definitely a hated stock generally by the market, as are most South African gold companies. They're well versed to have kind of slid in terms of their production as a percentage of global gold production for many years. We happen to think that Harmony is on a bit of a cusp of potentially turning that around. They do have a somewhat new management team. They've got a much more credible operational objective over the next few years. And we think if that comes through, which puts a positive story to the stock, as well as the combination of a higher gold price based on some of the sovereign concerns and potential inflation concerns that I think will come into the market. That's a very levered play on a higher gold price. And so if you are bullish on gold, Harmony we think is the best bet to play as an equity investment on that theme.
And rather go for a Harmony than go for a gold ETF, for instance?
Yeah, look, I mean, will give you a more leverage return.
You want,
yeah, so if you are bullish on gold, I think that's probably, plus a bit of an operational turnaround, I think that could be an interesting share to play.
Chris, thanks very much for coming in today. And I understand you're going to one of the matches tomorrow, so I hope you enjoy that.
Yeah, you too. Thanks, Stephen.